Well, thank you, and thank you all for coming today. I think I saw an article today that said that Israel is recommending no travel outside of Israel starting yesterday. So hopefully you guys all get back to Israel, and hopefully I get back to New York. What I want to talk about today is what I'm calling the move from digitization to automation. So at a high level, what I'm really talking about is how do we take software from something that is helping you do your work to something that's actually doing your work for you. And that's kind of the trend that we see moving forward. If you think about history, history's always been defined by the tools that we use. So whether it was the Bronze Age, the Iron Age, and interestingly, if you look, the Stone Age was 3.8 million years. The Bronze Age was 1,800 years, and the Bronze Age was 800, and the Iron Age was 800 years. And we've now moved to a new era of the digital age. And our view is that things are going to continue to compress, right? We've had this change from the industrial age where we took the time it took to assemble a car down dramatically. We automated that process. To the digital age where a car today has 150 million lines of code. And every industry that you look at is being impacted by software. So Goldman Sachs today has more developers than Facebook has. Domino's, 50% of their retail sales happen via the digital channel. And you know, it's an interesting fact, if you look for the last 10 years, if you bought Domino's stock 10 years ago, you made 27 times your money. If you bought Amazon stock 10 years ago, you made 16 times your money. So you can use technology to turbocharge businesses and turn old economy businesses to new economy returns. And so, not surprisingly, over the last 20 years, you've seen a dramatic increase in global software spend. It's gone up 9x over the last, since 1999. And correspondingly, you've seen a big increase in the market, the number of and the market cap of global software companies. From $600 million in 2005 to $3.2 trillion in 2020. Interestingly, Microsoft alone is 1.3 trillion of that market cap. But you know, the interesting thing, that's hindsight. And it's always easy to say, oh, it was obvious software was going to grow. It was so clear from a long time ago. The reality is that, you know, as we all know, if you had a venture firm whose name was Hindsight Venture Partners, the returns would be really, really good. But foresight's much harder, which is what everybody in the orange lanyard and Insight has to do. And if you look here, one of the leading IT analysts in the world, most of you are familiar with, is Gartner. And this was Gartner's forecast in 2002 of what the CRM market was going to be in the future. So the light blue represents Gartner's forecast. The dark blue represents what actually happened. And so they were off by an order of magnitude, and these are the smartest analysts in software. What happened? Well, the thing that's always hard to predict is transitions in platforms. And the transition to the cloud dramatically increased the market size for software. Because all of a sudden, any individual could buy a software company, could buy a software product online using their credit card. And it was not limited to the top end of large enterprises. And that dramatic increase through the evolution of the cloud is what drove that increased spend in CRM and almost every other horizontal market. But if you were smart enough to see it, this is what you could have done in the public markets. You didn't need to invest in Insight. You didn't need to invest in the many other great venture funds that are in this room. You could have bought Salesforce stock at IPO and made 62 times your money in the public markets. Right? You didn't have to buy it the day of the IPO. You could have waited 5 years, and you'd have made 40 times your money. But along the way, you'd have to deal with these headlines. Salesforce is on fire. Why am I short the stock? Salesforce worth half its current price. Salesforce is an irrational investment in 2012, after which you would have made 17 times your money. And so it's always hard to actually have the foresight to see these things. But if you do, and if you can, that can be the impact. But the other interesting thing that's happening is that notwithstanding how hot the tech market is today, if you actually look at the number of technology IPOs, it's actually gone down dramatically from the peak. And the average valuation at which companies are going public has gone up pretty dramatically. And if you actually look at it, what's been the impact of this? So you could have bought Microsoft when it went public in 1996 for $700 million, and today it's worth $1.3 trillion. And that means that as a public market investor, if you had the foresight, you didn't need, you earned almost all the value increase, right? Same true of Cisco, same true of Amazon. But if you look at the next generation of companies, look at the last column, these are companies that are not yet public, so I'm using predictions. But Airbnb, say, is projected to go public at 30 billion. Well, that means that the private market got to capture 0 to 30 billion, right? And the impact of that is that people realize that if they want to capture alpha in technology, they need to be in the private markets, which of course has led to kind of a dramatic increase in the amount of capital that's gone into software and technology, private investments. So this has led to the question, obviously, that gets asked is all these historical returns have been great, the growth has been great, what's going to happen over the next 20 years? Is this sustainable? Why is it sustainable? And are the valuations sustainable? So if you kind of look at it, take an industry view, what you would find is the following, that you have a number of industries that have invested very, very heavily in software. I'm going to use financial services, but media and technology, obviously, all as well. But even financial services, who spent $600 billion in IT in 2019 alone, only has 50% of their enterprises on the cloud. Right? So even industries which have a very high investment in technology and software still have a long way to go to kind of truly digitize their businesses. And as you go further back into other industries, there's many, many industries where the level of digitization is very, very low. As an example, half of construction employees have access to a smartphone or a PC with an internet. And if you can think about the workflows associated with it, they're massive. And yet they're not accessing technology at the job point. And there's tons of examples of this. Agriculture would be another one. You know, we have an investment in a company called Ceres Imaging, and Ceres Imaging uses AI and spectral imaging of farms to basically help them determine what they should do to, in effect, increase their yield by looking at other farmland that's performing better, that's closely adjacent. Yet the penetration rates of these types of technology are really, really low today. But the productivity enhancements are very, very high. So over time, all of these are going to continue to move up the curve. The point is, they're at a very low point of the curve today on a consolidated basis. So there's many, many years of growth left in just the digitization revolution. But that leaves off automation. So in all of these industries, we think that there's going to be a significant increase in automation. Again, I'm defining automation here as really going from using a software tool to help you do your job, like Microsoft Excel might, to a software tool that might actually help do most of your job, right? So that automation age, and just to go with the car analogy from earlier, is autonomous driving, to use the car example, right? So you went from better manufacturing to lots of software technology in the car with navigation systems that you could use in order to drive, to actually driving itself, right? And that analog applies in a lot of enterprise applications as well. So if you think about that automation age, it's powered by lots of different trends that many of you are familiar with as technology investors and entrepreneurs. Internet of Things, natural language processing, AI, ML, robotic process automation. These are all terms that many of you are familiar with. And I just want to pick two examples of how we see the automation play out. And I'm going to use cybersecurity, and I'm going to use software development, as the two examples here. So let me start with cybersecurity. I mean, show of hands, how many people interact with what's on this page? I mean, pretty much, I think everybody has either conference room tablets at your office, vending machines, smart refrigerators, CCTV cameras. And the problem with cybersecurity today is all of this have become kind of new cybersecurity attack vendors. So in your IT department, in your company, your director of IT generally has a pretty good picture of all the PCs, has a pretty good picture of all the cell phones, and then after that, it drops off pretty dramatically, right? But just think about your home. You have smart thermostats, you have Alexas, you have cars. All of these things have an IP address. And once you have an IP address, it's hackable, right? And there's lots of examples of this. The one that I used that is the scary one, and there's been lots of articles written about this, is when the parent walks into their kid's nursery and somebody's talking to their baby through their internet-enabled baby monitor. And that happens all the time because guess what? It's an IP address. The challenge is how do we solve that? How do we solve that problem? One is that the problem is getting bigger and bigger by the day, right? So the dark blue represents the number of non-IoT devices which are connected to networks, and the white represents IoT devices. And you'll see that by 2025, IoT devices will swamp traditional non-IoT devices. Right? So how do you deal with this kind of issue? And I'm obviously going to do a commercial for an Insight portfolio company, but Armis is a company that we recently invested in, which I'm sure many of you are familiar with. But what are they doing? They're using AI and ML technology to automate the monitoring of the IoT devices, right? And what is always surprising with the companies, when we talk to the CIOs of large companies that are customers of Armis, is the thing that they were always surprised by was this. They had very good visibility on the blue. This is actually a Fortune 500 retailer that's a Insight, that's a Armis customer. But what they were shocked by was that gray. They had no idea that there are this many devices that were connecting to that network. And what Armis is allowing them to do is manage the security associated with that using kind of next-gen technology. The other example I want to use is software development, and if I'm talking to a less technical audience, people are like, I don't understand, why are you talking about software development? And I'm like, well, I'm actually not talking about, I'm talking about the tools that software developers use to develop software, right? Which all of you are familiar with, but in a non-technical audience, they're like, I don't understand how that's a market. And like, well, it turns out you don't just show up as a software developer, you use tools as a software developer to develop your own software. And if you look, it's historically, and I'm just going to use the easy example of Microsoft, but it takes years and years for products to get developed. Some of that is because it takes a long time to get developed. Some is because development teams get unwieldy. And some is because testing takes so long before you actually put a product out in the enterprise. And today, what we see is that in kind of next generation DevOps tools, development operations tools, which is what the developers use, things have changed dramatically. So using Amazon as an example here, Amazon releases new code every 12 seconds, 7,000 times per day, right? So we've invested a lot around this trend. I'm just going to use one company as an example here, which is Tricentis, and these are all Insight portfolio companies. A number of them are Israeli Insight portfolio companies. But Tricentis is a continuing testing company that basically automates the testing of software. And the impact can be dramatic. This is a Fortune 1000 payments company that's a Tricentis customer. And basically, they're able to get software out to market 90% faster, 90% reduction in testing costs, some of that being manpower related, and just an ability to scale their development process in a way that they couldn't do without this type of software tool. Right? Now, there's all kinds of implications which go beyond the scope of what I'm going to talk about today is certainly some of the ROI associated with these things is less people. And there's societal implications to that, but the reality is for these large companies, in order for them to be competitive, they're going to have to invest in things like this. And when people say, well, where do you think that growth for the next 20 years is going to come from? My answer is simple. It's the old economy. It's the Domino's of the world. It's the Honeywells of the world. It's the GEs of the world. It's the banks of the world. In order for them to compete, if I'm JP Morgan or Chase or Citibank or B of A, and I need to compete with the next generation bank, I have to invest in more flexible, agile technology in order to be able to do it. And the penetration rates of these types of software are so low today that from a long-term standpoint, we're not in the business of predicting the impact of coronavirus in the next quarter, but as we think about the next 10 or 20 years, I couldn't have more conviction that you're going to continue to see the strong growth you've had in software over the next 20 years as we've had over the last 20. And while I picked two trends with software development and cybersecurity, there are obviously a lot more trends that are affected by this, right? These are also all Insight portfolio companies in different categories. But each one of these could be its own 20-minute presentation about what are the trends going on in those things and how are they moving to become more automated, AI-driven solutions. Of course, this is a Israeli-focused conference, so of course had to talk about our significant investments, which the introduction, this has been probably our most active area the last geography the last 2 years. It's the only place outside of New York that we have an investment professional and an office. Danny, you want to stand up? And he's the boss. So if you want to talk to Insight, he's here, and his email is up there. So please reach out. I think we expect to continue to be active. What I want to end on, though, is that the proof's always in the pudding. You can always talk about trends, and paper doesn't refuse ink, and PowerPoint, you can put anything you want in PowerPoint. But the reality is always, what are the numbers, right? And these are our last 4 funds, and this is the median revenue growth of the companies in those portfolios. And when you think about a market that's saturating, what you would expect is de-accelerating growth, right? And we're seeing accelerating growth. Right? Companies are growing faster today than they were ever growing before. And if that growth rate is sustainable, we think the valuations are sustainable. And no one has an absolute predictive ball on whether or not it's the case, but all the underlying macro trends would suggest that it is. So thank you, and I'm happy to I have a minute, so I can, happy to take any questions. I've stunned everybody into silence. No, over there.
Hi. Is there any specific industry that you see growth coming in the next few years?
Well, I mean, I think it's this overall trend, and I mean, I think I was meeting yesterday with I met yesterday with the CIO of Swiss Re, insurance company. And one of the things that they're very, very focused on, in fact, they want to meet with our team, is to understand what are the areas of their business that they can increase automation to be more competitive. And I'm not saying, therefore, my answer is not necessarily insurance. My answer is I could pick almost any vertical and give you a story like that. So I think it's less around a particular industry, and it's more around a trend, right? And that trend is really, how can I drive more efficiency in my organization? How can I use next generation type automation type technology to, in effect, have systems do the work for me and maybe even better? And I'll end with a story on this. I was having lunch with the head of a major hospital in New York, and with 4 or 5 other people, and one person asked him, he said, well, my son wants to be a doctor. Is there any advice for him? And he said, yeah, don't be a radiologist. Tell him not to be a radiologist. And the person said, well, why is that? And he's like, well, at our hospital right now, computers are reading scans at a 90% efficiency rate, 90% accuracy rate relative to a computer. Relative to a doctor. And they don't need a vacation. They work 24 hours a day. You don't have to send them for Hawaii. And now, do you want and the reason there'll still always be a role for a doctor is nobody wants a computer to come in and tell them that their mammogram was positive. You need to have human interaction for that. And I think what you're going to see, and this is its own presentation, but I think what you're going to see is a need to train people in a different way. And if you talk to, I'm on the board of a medical school, NYU Langone in New York, and one of the things they're doing as they interview next generation medical students is looking for their empathy and looking for different skills under the understanding that as technology is going to become more important from a diagnostic capability, we've all had experiences with doctors that are, let's just say, user interface challenged. And I think it's going to be important in this world that skill set is going to become more important. I'll end on, oh, sorry, you won't, go ahead. No, go ahead.
The Israeli market for growth stage investment becoming very competitive in the last few years. How do you see the future of the growth stage investment in Israel, and how do you see the balance in Israel between the growth stage and the early stage funds?
Well, I just think, and you might have a different view, but I mean, I think that Israel is just early, to use my digitization slide, Israel is just earlier in its evolution of a growth stage market, right? And a couple of things happened. If you go back and look at history, there was a tendency on the part of Israeli companies to get to a quick exit, right? It's how do I get my $100 million or $150 million exit? And so when you thought about global investors, they didn't want to play in that market, right? If you're Insight or you're Sequoia or you don't want to come and invest in something and make 3 times your money in Israel. You want to figure out how you're going to make 10 times your money. And there was a tendency to sell too quickly. And I think that's changed dramatically. And the reason it's changed is success changes it, right? So people start seeing companies to get to very large exits. They take a longer time horizon. They want to get to billions of value, not hundreds of million dollars of value. And I think it needed that mindset change before late-stage investors were willing to take the bets that we need to take at the prices that we need to take them at. So I think that's changed a lot. And then in lots of categories that are very hot right now, whether it be cybersecurity or others, the intellectual talent in Israel is very high. So if you combine high talent, and we're also feeling like managerial skill has become more flat. Like it used to be that the only place you could find scaling managerial talent was Silicon Valley. That's not true anymore. You can go anywhere in the world, including Israel. So the combination of great IP, managerial talent, and most importantly, the willing to go big, I think is changing that ecosystem. So I'd like to say that we'll be the only ones, but it probably won't be. So.
Thank you very much.